Welcome to Making Your Miles Count Production, an educational program to all Canadian lease owner-operators with your host, Robert Scaper.
Well, welcome to the Making Your Miles podcast, and today we got a great topic today, leasing a truck, and what we have here is it Ernie?
Ernie Holmes, yeah.
Ernie Holmes
Yeah.
of Power Leasing. And what we're going to do is we're going to find out a little bit about the history of a little bit about Power Leasing, but also a history of leasing and also owning your own truck and the like. A little bit of the financing aspect that goes way back, and also where we are exactly today.
Yeah.
Quite a bit of things going on. A lot of changes in the industry, for sure. I think we've both been in the industry very similar to the same amount of years.
Yeah, I think so. Yeah. Without aging ourselves, it's been a while.
Yeah, we don't. Yeah. so it's a good. So tell me a little bit about yourself. What's your history? Where'd you graduate, and then what'd you do after that?
Okay, I actually graduated from university in '92. I went to a university down in the States called Pepperdine University.
Pepperdine?
Yeah.
Oh, I've heard of it.
Have
yeah,
you?
okay.
Okay, yeah. At that time, I had no idea that I'd land in the transportation industry. Didn't know what I wanted to do, but I definitely wanted to get into finance. Started off my career actually as a liquor rep, so that was fun, and I don't know why I ever left that. But soon went into car financing shortly after that time, and spent 3 or 4 years with that, and then in '98 got into equipment financing. So
Okay.
Started off with a small little company, and then I've actually been with Power Lease as part of the Travelers Financial group of companies, and I've been with that group for just this year was my 20th anniversary. So,
Oh, yeah. Oh,
been there
okay.
a while. Yeah.
20 years.
So it's been good. Yeah,
It's a long time.
So seen lots of ups and downs,
Oh,
and
yeah?
lots of different things through the years. Yeah.
Yeah, sure.
Yeah.
Okay. So, what was your first major foray? You said, when did you start? What year?
I started in '98.
98.
Yeah.
So that was just before the recession.
Yeah, things were good in '98, '99. I was a young guy thinking I had it made.
Had it made, rule the world.
Yeah, ruled the world. And then 2000, 2001 hit.
Yeah.
Life was a little different.
Yeah. Just as a little bit of a context, I went through the exact same in 2000, 2001. I've always explained 2000, 2001 as the worst recession in Canadian trucking history, primarily because in preparation for NAFTA, there's a whole bunch of things like they opened up. There was deregulation on the entire trucking industry prior to the 90s. Everything was regulated by the government. You couldn't do anything like freedom of choice in terms of nobody could go out and get their own running rights.
That's right.
There was a long years and years process for that.
Yeah.
And so they deregulated the whole industry, and it took well over a decade to do that. It was about 15 years. But the last vestiges of regulation died December 31st, 1999.
Okay.
And so when 2000 came along, everything was in the free market. Now the problem was at that time, just as that came in, the fuel costs basically doubled. The fuel costs or oil per barrel back then was $10, maybe $20 a barrel, something like that. Suddenly it just doubled.
Yeah.
And your fuel costs went up, and trucking companies. There was because of deregulation, anybody could get their own running rights. So there was a whole bunch of new trucking companies. Thousands came online, and nobody knew the ups and downs of fuel costs. Because for the last 10 years, it was all level. It wasn't out of sight, out of mind. And suddenly, everybody was scrambling because when you got a high jack of fuel costs, suddenly. Well, what do we do? Well, first of all, we protect our own cash flows, so the company trucks were protected, and the owner-operators were the first to die.
Yeah.
And because they had a contract on there, well, we're not paying you anything more because, fuel costs are fuel costs, so be it. And there was fields were filled with trucks.
I remember that. Yes.
It was an absolute nightmare. But they had very, very business-minded operators back then. Guys were like, they knew what their cents per mile were running and stuff like this. And it just wiped out a whole generation during that time.
Yeah.
But so what happened when you were? I mean, you had a huge amount of trucks that came back, or what did you experience?
We had, repos. That one and then even the 2007, 2008.
Yeah,
well, 2007 was a banner year, and then 2008, 9 was sort of that recession. It really becomes tough. We get, new business dries up, so we're not financing any trucks to go forward, and then delinquency and repossession start to go on the rise. And it really, as much as it hurts a lot of the owner operators and even some of the trucking companies as well, it's tough on the finance companies. We experience big losses. And a lot.
I know there was during that time in 2000, 2001. I know two very large financing companies. If I remember right, Associates was one of them that had to be bought out by somebody else, and there was a whole bunch of shifting around.
There was then, and in 2000, 2007, 8, the same thing happened. But it just the losses become too big, and where it starts impacting everyone is it's now tough for an owner operator or small fleet or businessman to get financing easily and readily, right?
Yeah.
So, banks have always been not understanding the industry and how it works, and you're almost going like a sole proprietor, but your business with all these deductions and looking to buy a $200,000 asset, and they don't know how to score it properly. So you really need a good leasing company to understand the business. And when they get hurt, it makes getting capital to buy your truck quite a bit more difficult. So it really dried up after that period of time. There was a real tightening in the market, and we're actually experiencing that today. Credit conditions have really tightened up in the last couple of years. There's been
I remember now that we're thinking about back in the 2001, I remember two chartered banks in Canada openly advertising that they will not touch the trucking industry. It was like a leper, the whole entire industry. Yeah. And I had never experienced anything like that much. I shouldn't say prejudice, but there was just like it just get away from the trucking industry because it's falling. It's in a free fall, and so I guess there's ups and downs where it's really attractive and then it's really not.
And we're in one of those times right now where it's not as attractive for the banks. Some of the big banks are saying no to transportation, except for very large companies. Like they're very, very selective in what they're doing. So. I think we're in one of those times. It makes it harder for the owner operator to get good financing.
I agree. Yeah. I'm going to go a little bit into a rabbit trail here, but Pride Trucking.
Yes,
they went upside down, and it negatively affected the financing and transportation industry. Yeah. Even the manufacturing and the they bought directly from the manufacturer. They didn't go through dealerships even in order to do it. And so there was huge debt. I can't remember. I think it was almost $2 billion worth of money. How has that affected?
Well, that would be the biggest reason. I think a lot of lenders have pulled out in the last year or two. So Pride had many arms, and one of them Pride Truck Sales, and then they had a financing division called T-Pine. Yeah. And so T-Pine, they were a leasing company that would then sell their paper to some of the bigger players out there. So as part of their securitization process, and the credit quality of some of the stuff they were underwriting wasn't good, but then they were selling the lease contract in some cases twice.
Oh, and wow!
So that becomes a house of cards that falls down. So a lot of finance companies that specialize in transportation experienced some big losses on that portfolio. And with that, they just they're tightening up their credit criteria, and some have exited the market. There was a lot of small to mid-sized players who dealt with T-Pine and Pride who didn't make it. Like there's been a lot of bankruptcies, particularly some of the funders more in Eastern Canada than Western Canada. We were a little more isolated in Western Canada from them, but it had a major. It changed the financing industry and transportation drastically.
Yeah, that's like I still do. I actually went around and I was talking to a salesman probably just about a month or month and a half before Pride went under,
Yeah.
and I was talking to a representative of Pride, and I was thinking, should I have him on my podcast or not? Because he was a salesman for trucks.
Yeah,
okay, I didn't know about his financing or anything like that.
Yeah.
Salesman truck, and I said, you know what, valuation of trucks, what's going on, that kind of thing, and I was him and hawing about it a little bit, and I thought, well, okay, maybe I should, and then Pride, then all the news came out with Pride, and I'm going, you know what? This is going to sound very, like I'm an opportunist or something like this, and it's not really fair on the guy. So I ended up not talking to him or whatever. But there's different ways in which people can finance trucks, and it's like there was one, and this was a number of years ago. This actually was in 2001 as well, where a carrier was leasing out their own trucks.
Yeah.
And they went through, it wasn't bankruptcy, but they were trying to sell the company.
Okay.
And the guy was a shifty guy, okay? Like, let's be right out there. And he had been shifty for 35 years. And so right at the last minute, he was trying to sell the company, and then CRA, I guess they were on the outs with CRA. Yeah. CRA came in there, grabbed all of the cash or whatever, with all the accounts and stuff like this, and the whole thing collapsed. Well, there were individuals who were making their payments at the company, and they were like, 4, 5, 6 payments left on their truck, and suddenly they find out that they got to come up with another $40,000 because that's how much liens were on it, because there was extra security that was taken on the vehicle itself, and it was a terrible incident for sure.
That program where you lease a truck from a carrier, it can be a very, very good program. Like if you're, into your book, choosing the right trucking company, choosing the right carrier, and if you're dealing with one that legitimately is wanting to help you and is offering that as a service, it can be a great tool to help you get ahead. But there are so many that are doing it properly, and
their success rate varies.
It's
there's a story. Oh goodness, I'm not going to say the carrier name, even though I can't remember what it is. But anyway, there was one landmark case. Actually, it was here in Manitoba, where a carrier was leasing out trucks to about 10 guys. Yeah. And they were doing all okay and stuff like this. Actually, almost all of them were okay, but there was one guy who didn't do well. Mm-hmm. Okay, and so what he did was he went to Canada Revenue Agency and he said, "No, I'm not an owner operator. I'm just I want my T4 from this guy." Yeah, okay. Yeah. And the problem that the carrier was doing was the carrier was keeping all of the input tax credits. Okay. Yeah. And so there was no difference between the carrier and the owner operator. So when CRA came in there, he says, "Wait a minute, he has to have his own GST number, and he has to claim it all back himself and stuff like this." And nobody was out any money, but it was a perception of ownership. Yeah. And so CRA started pushing and says, "You're doing this wrong." The owner of the company, who's now in the States because he fled, but anyway, he had a horrible attitude, and he started mouthing off to CRA and all sorts of stuff. And the CRA said, "Well, okay, we're gonna make you an example of you." Sorry, you just in his face and stuff, and they shut the whole thing down. Yeah. Like the whole thing, like they took $500,000 out of the account, and they seized a whole bunch of things. I interviewed the CFO of the company at the time, and he was 80 something, and the initial interview, he told me all the stuff that happened. He says most of the problem was the owner didn't like CRA, and so and he pushed back. And I said, "Okay, I want to get a little bit more detail on this because this is a fascinating story. Would you give me a little bit more detail?" "Sure, no problem. Give me a call later." Okay. Yeah. So I started a couple weeks later. I called him back, didn't get him. Called him back. Probably about 3 or 4 months of no calling back. I finally get a call from a guy who says, "You keep calling here. trying to get a hold of my dad. I said, yeah. He said, he passed away.
Oh no.
Oh, I had a wonderful interview. I could, because it was fascinating. Because what he ended, the only thing that saved him was that he registered his corporation in North Dakota.
Okay.
And then he operated somehow or other. He operated here in Canada.
Okay.
And then when Canada Revenue Agency had to go to get permission from the IRS for something, and then the IRS said no, they're independent because they're a little bit more entrepreneurial in the States than they are in Canada. Yeah. And then the judge said, well, if the IRS says they're independent, then I stand by. Yeah. And so the whole thing collapsed. Yes. But meanwhile, the entire company just folded. Yeah. Even though 9 out of the 10 operators wanted it to continue, CRA just shut them all down. Yeah. So that whole thing reverberated all across Canada, all over. There's a lot of articles written about it, and it shifted the in-house financing of trucking companies. So now it could no longer be the exact trucking company that would be leasing it out. It had to be either a subsidiary or some arm's length thing in order to do it. And there was a lot of rules associated with it.
Yeah, and that's kind of how Power Lease got its start. Was
really?
On that vein, we I think back in around 2014, a gentleman by the name of Steve Brookshaw, who was with Contrans Flat Deck at the time, wanted to convert some of the drivers to owner operators that they had there. But really, he's a smart guy and understands the industry well. Knew that he had to do it in a way that they were not the lessor, they weren't financing the trucks, and wanted to have that arm's length agreement, kind of separate church and state. So many of the owner operators didn't quite qualify traditionally for credit, whether that being a large down payment required or some credit challenges along the way. Yeah. So he wanted to make sure he helped them, in the process of becoming an owner operator, and kept it separate. So that's how we first got involved with him, is working with him to convert the drivers to owner operators, having a wide credit swath because they were employed by Contrans already, and he could vouch for them, and he Contrans helped us out in the process of understanding the whole process and everything like that. So that's how we all started, just making sure we had that church and state, that it was
be separate,
that it would pass the CRA rules. Sure. And then that's where we thought, well, if it's good enough for them, everybody will want to do this. And then we tried to expand the business. Learned that wasn't what everybody wanted to. Yeah. But it was.
I used to, and I've talked a little bit about this before. I used to do a little bit of truck financing. At the most I had 12 on the road, and I obviously don't do that anymore. But 70% of my clients were very successful, and they could not get financing anywhere else. Yeah. And I still have some of those original clients that I had about almost 25 years ago. Wow. They're still my clients today, and they're exceptional. They've done exceptionally well. And they couldn't get financing at the time, and they got through me. They paid off the truck, and then they got the next truck, and they did exceptionally. It's very, very rewarding. It is. 70% I had real success with, and the 30%, that's where I learned real life. That not everybody is looking for success. They're looking for excitement, bragging rights, something, some change in their life but they're not committed to success. Now, 30% maybe back at the time is a little high, but I didn't have a very good screening process during that time, and I have a weakness in my life, and even in my business right now, I don't have the final say of hiring. Because I believe in people too quickly, and I've decided that I don't want to give that up. So I'll just delegate the responsibility of hiring to someone else because I trusted people too much, and they took me down.
Yeah, And I'm the same way. I trust people too much.
Yeah.
And I think one of the how we protect ourselves, we're having about an 83% success rate with
that's
with
good.
the owner operators, and we have a few more than 12, so we can
Sure.
we've got some safety numbers with that as well. And I love that term you just said. Not everybody's looking for success. Because, no matter if you give them the tools for the financing, the carrier, a good carrier to work with, all the stuff, they still find the way to not succeed. But we've kind of done the same thing you did there. Is we're gonna when someone approaches us for financing with Power Lease, part of our criteria is obviously the credit criteria, which we can approve a lot of people under the criteria that we have with Power Lease, but the ones that are successful, we've been sending to top carriers in Canada, and they have a very good screening process to say who they're going to hire and let in. And so we do rely on them a lot to say, hey, this one here, we see the success, we see they're looking for success.
The first time I ever, lately, in the last, I think it was probably about 3 or 4 years, first time I heard about you, because some of my clients actually had financing through Power Lease, and I looked a little bit through what you had. And the first thing that I seen was the logos of approved carriers.
Yeah.
And instantly I'm thinking, okay, at least there's some sort of standard there.
Yeah.
And I was immediately impressed. I said, okay, well, if they're on the same page, they're all on the same, that there's a safety on there. Because I have seen, how do I say this nicely, garbage companies.
Yeah.
And they go through, and they can grind operators into absolute ground beef.
Yeah.
It is just horrible at some of the stuff that I seen one guy net less than 70 cents a mile after fuel, and he had to make his truck payment and his personal stuff, and there was just no way. The guy was living
on the revenue. They're not even being honest with it, right?
What's that?
And they're probably nickel and diming them on the
Oh,
revenue.
totally. They were
not being
just
honest,
I was looking through his statements, and I said, "Are you sure you even want to be at this carrier?"
Yeah.
And you know what he said? He said, "Yeah, but every time I come in, oh, hi, how you doing?" and slap me on the back, and I feel so good, And I go out there and I said, "Yeah, but you come back and you have a $1,200 paycheck, and you got to make a truck payment." And he said, yeah. And he stretched it like it was 6 months before he actually left. And the guy left with, holes in his socks. Yeah. He had nothing. He lived in his truck.
Well, I wish I read your book before we had to learn the hard way on choosing the right truck company. But I think that in my 30 years or so of financing, that is one of the keys to success, is choosing the right carrier. And I know sometimes people get, they'll talk to somebody in the truck stop or one of their buddies and think the grass is greener on the other side. And my grandpa always told me that if you think the grass is green on the other side, you better start watering your lawn.
Yeah.
But there's a good carrier who doesn't nickel and dime you is always better to work for. And so we're really selective on the carriers that we work with, and we want the top 100 on there. But we really, when we go and meet with them, you can walk into their shop and know right away, is there a good culture here? They've got the guys that are the $1 million on the wall. They're celebrating all their drivers and owner operators. And those top 100s, obviously times are better or worse for them as well, but consistently they have miles. Consistently they treat their owner operators and employees well, and the guys are always making money. You might be able to get paid 3 cents more a mile somewhere else, but are you going to get the miles to make the difference?
Or like there's in my second book. I actually went through the scientific approach to, compare carrier contracts to carrier contracts. I was about 2/3 of the way through, and I realized, first of all, truck drivers don't go through a scientific approach. There's an emotional say, hey, my friend did that, so I'm going to do that there too, or move there or this. It's much more of an emotional aspect of it. But in there, I have a charts of about 12 or 13 different carrier contracts. And sometimes I've talked to operators and say, hey, look at this the one that pays the most. Yeah. And he says, I want to be there. And I said, I don't know if you really want to be there. Yeah. I said, first of all, the one, it has, I think it was 85% turnover. Yeah. Okay? Yeah. A huge turnover. They pay the highest, but they have huge turnover. And just because their contract says that high, you don't know all of the nickeling and diming. It doesn't take much to get you down to the bottom just by things that they said, oh yeah, by the way, you have to pay for this because you did that. Yeah. Well, they got your money. What are you going to do? You know, in there. So it's a nice textbook, and it's a good reference to understand the industry. Yeah. But realistically, you have to. How do I say this? You really have to want to have a lifestyle, because you're looking 5, 6, 7, 8 years in at a particular company or a particular industry, and not just the 3, 6, 12 months aspect of it. And your whole family life, everything has to work with that. Yeah. And not everyone can do that. No. There was one carrier just 50 miles from me here, who consistently paid 7 to 8 cents per mile less than everybody else. Yeah. But they had no problems with owner-operators because they got dispatched Monday morning, and they got back Friday night. Right. You know? Right. Yeah, and that it's like $700-800 a month difference. Yeah. And but people have no problem with saying, you know what, for $700-800 a month and I'm home every weekend, I'll do it. Yeah. You know, so there's a lot of different other factors. It's not just money.
No, you're right. And you really got to take that in consideration when you're choosing the carrier, right? Yeah. And there's no question you can make more money if you're going out for 3 weeks at a time. Yeah. And turning lots of miles, but your family life suffers. And so what is important to you in that? And it is important when you're looking at a carrier to potentially talk to some of the owner-operators or drivers that are really working there. Big difference, the and sometimes it's personality. I'll give you an example. There's one carrier, it's still in operation, and the owner is also the dispatcher, and he and that guy has the most foul mouth. He cusses until your ears turn blue just listening to him. Yeah. Okay, but that guy moves freight. Yeah, like unbelievable. He can move freight. I know some guys very conservative, very religious or whatever on at the company. Yeah, yeah. I'm thinking. So I asked him. I said, "How do you put up with this?" He says, "You know what? It's absolutely horrible." But the guy moves freight, and I'm doing okay. You know, so there's sometimes it's you compromise a little bit and whatever, and there is no exact science to find out the exact right carrier for you. It's like a marriage, you know. You make it work, and it's good to what are your top 5 most important things in getting that carrier, because there's great ones that they care about their owner operators. They're going to treat you well. They're going to know your name when you come in and always say hi to you and all that stuff. But you're going to be on the road a lot longer.
So when you went through that process and you have your approved carriers, how did you go through that process to thumbs up or thumbs down? Because you probably looked and said, no, we don't want that one.
You know, so we will. We're looking at larger carriers, number one, because they typically have the miles and the revenue available. So we know they're consistent for work. Yes. You're always going to make some money. So that becomes number one. Number two is we have a checklist for culture when we go and visit them. And at Travelers Financial, the parent group of Power Lease, culture's always been our biggest thing. Our CEO Jim Case is all about culture and just drives it home, and always says culture will eat strategy for breakfast every day. Right? It's just one of those things. You walk into carrier, you can feel the culture. You kind of know it right away. So we have a checklist to say, hey, do they have the right culture? Are they rewarding? What is their turnover? We want to look at their owner-operator pay package and understand how it is, because everybody's a little bit different just in how they pay for mile and insurance and registration. A lot of them, especially with the top 100 carriers, it all comes out pretty even in the end.
Very close.
It's just different ways of slicing and dicing it. And then we want to understand who your contracts are with, right? Is it again with the top 100s? They tend to have good contracts. They're not living off the load boards or spot rates all the time. Probably some for back.
Do you have a specific percentage that you look at for load board versus direct to the carrier?
Yeah, and we know that varies over time. Yeah, we're kind of looking at how much of theirs is with solid contracts.
Yeah, right? Like 60% or something.
So those would be some of the big criteria. We also work a lot with the ones that are the top fleets to drive for, HR Trucking top fleets to drive for. Again, because they go through a big series of of questions and data and information to choose those
Yeah.
top fleets. So it always is a good indicator. And you know, we meet with the senior executive level, and you know, you get to know them, and it's hard to fake it.
Yeah, it is. Yeah.
And then we'll interview owner operators that are there as well,
yeah.
to make sure that it is good. And then Mark Wallace, of course, who's with us. He's been,
I'm going to have him on the program.
You gotta have him on. Yeah, he knows way more about the trucking side of it than I do. But he's been in transportation his whole life, and you know, worked all aspects of it. And I'm always amazed when you mention a carrier. He'll know exactly what their big contracts are and where they're hauling and you know, their routes and everything. I don't know how he knows it all, but he does. So he helps give a good idea of who's good and who's bad. But, But there's a lot of, like in Manitoba here, there's a lot of great carriers.
Yeah,
like it really is a good.
It's a central hub for a lot of stuff.
Yeah,
a lot of stuff.
Yeah,
I
think a lot of stuff that goes out west comes through here, and there are some really good ones. Yeah. That's for sure. Now we got to know each other, I guess, a little bit. You just almost other than having sharing clients. Yeah. We'd like to get more over to you too. But
what's that?
We'd like to get more over to you as well.
Oh, good.
I like that.
You like the what my first book was written on, taxes, and I would be doing something completely different if it wasn't for non-taxable benefits.
Yeah.
I'm a big, I don't know, my dad hated taxes.
Yeah,
okay, just couldn't stand it. Now he never cheated on his taxes, but he squeezed the nickel till the beaver crapped. You know, it was that bad. But so it was ingrained in me very young. And I got into accounting primarily just because I like numbers. I've always liked numbers and have numbers talk to me and say something. What is it? What they're actually saying? And I got into trucking. My wife and I drove for a few years, and then I went and I got my MBA, and then I wanted to actually get out of the trucking industry. So I was looking to get out of the trucking industry because it wasn't really stimulating to me. It's actually a very simple business. You have one asset depreciating and one employee, and that's it. You know, this is not rocket science. You know, and I'm a little bit more. I shouldn't say sophisticated, but I like more complex problems than that, right? Yeah. And so I was looking for probably about 7 or 8 years to get out of the industry. And so, I mean, I got into a software company for the legal system and all sorts of different things. And then I read an article by Jim Park in the Highway Star. I think it was Highway Star. Yeah.
Okay.
And talking about non-taxable benefits, and where instead of using the TL2 simplified method, which everybody uses, okay, an owner operator should, or an independent operator should incorporate or become an employee of their own corporation, and that way they can collect non-taxable benefits.
Yeah,
and then you use completely different numbers to come to report to Canada Revenue Agency. Yeah. Right now, the TL2 simplified method, depending on which province you are in Canada, it averages. It says $69 per day, but realistically, it's only $17.04 that it actually affects your taxes.
Okay.
Whereas you can utilize there's a highly complex. I'll give you just the bottom line. It's $144.25 per day. This is just Canadian dollars.
Yeah.
And so that's what you're comparing the two, because you can pull out $144.25 per day in Canada tax-free from your own corporation. Yeah. Now, there's a whole string of rules, everything from your ELD all the way to your minute book. So it's quite,
do it right.
You got to do it right. There's a lot of things.
So if you're doing that, if you're on the road for 20 days, you can make 20 times 144.
Yeah. So if you're just in Canada, it's like $30,000 a year.
Yeah.
Something like that.
Wow.
Now here's an even added benefit to there. From your corporation's perspective, you can factor out the GST or HST on that $144 per day. So if you imagine, we have some clients in Ontario, all they do is just Ontario miles, long distance.
Yeah.
They get HST every day. So they get about $13, $14, it's $15. Oh, I don't know. I have the chart over there. Something like that every single day in HST back. Now, you extrapolate that, and you're talking almost, you're talking about $3,500 per year in HST input tax credit that you get back that otherwise you would never do. You would never have it. It's shouldn't say it's free, but it's just in the calculations in there. Well, that's almost it's about 1.5 times your accounting fees. So goodness sakes, what like it pays for itself. Just that factor. But if you're in a GST environment, you get GST back, and it is and you don't have to keep any meal receipts. You don't have to. It's very easy. Well, it's very easy to present it. Yeah. Now, your accounting firm has to defend it to Canada Revenue Agency. That's one of the 7 disadvantages of it, and defending it is not the same across Canada. We have clients, Prince Edward to Vancouver Island, and there are pockets of Canada Revenue Agency that have zero idea what we're doing. And so we have to handhold these auditors all the way through. Right. And they sometimes kicking and screaming. They can't stand it. If they look at it, and especially if you're down in the States, because if you're $144 in Canada, you're over right now. You're over $200 in the States.
Just by
per
conversion,
day.
Or
just by conversion, you put the exchange rate on top of 144. You're over $200, and so if you're mostly in the States, you're looking at $45,000 a year in non-taxable benefits, where the average taxable income for an owner-operator is, somewhere between 60, 65, maybe 70, somewhere say $65,000 a year. If $45,000 a year is taken out of your corporation tax-free, that means you're only paying taxes of $20,000 on $20,000. Yeah. Well, instead of paying, the average driver pays between $12,000 and $20,000 a year in taxes. Yeah. Well, now it goes down to $2,000 to $12,000. It just drops 60% of your taxes just disappear. It's basically $1,000 a month in positive cash flow. Now, the negatives are on that, and is that, for instance, if you go to a bank and you try and borrow, you historically, you got $65,000 as a T4. Now you have $20,000. The guy goes, "Oh, you poor guy, you're going a terrible thing." Yeah. But you can, if they would recognize your $45,000 in non-taxable benefit, then you're even better state than before. Banks, chartered banks, don't recognize non-taxable benefits. Case populaires and credit unions are starting to. Okay. They look at that and they say, "Oh my goodness, I can see what's going on there." Yeah. They can put it. I even did a presentation to a credit union, and they programmed the non-taxable benefit back into the loan department, so it was fully calculated. Okay. Now, if you're leasing, you have the freedom to put it back in there if you want, because then the numbers make sense in there. But the entire financing industry, the classic, which is chartered banks and stuff like this, they don't really respect the trucking industry, like charter banks and stuff like that, And so they
and if they got it, and I'm kind of glad for that, because if they got it, we'd probably be out of business. But it
could be
they don't. And that that is one of our competitive advantages, is we get the industry, stuff like that you're talking about. I wish more people take advantage of it, but if we're looking to grant you credit for a $200,000 truck, we understand that, and we'll look at it. And I think one of the things, like in the 30 years of financing owner operators, and how we kind of came up with how to structure power lease, we saw a lot of owner operators fail, and a lot. We look at credit first, right? What's your credit score? Do you have good credit as an indicator to pay? And often surprised by guys that didn't have great credit succeeded, and guys that did have great credit didn't succeed. Yeah. And we kind of looked at a few things and so we based it on 3, and I wish we knew the 4th, but you're talking about it. We said, hey, choose the right carrier, because that's going to choose a lot of success. If you change carriers, what a lot of owner operators don't realize is you're probably going 2 months without a paycheck. By the time the existing carrier holds back your last paycheck to make sure everything, they've got all the expenses there to release it. And then the new carrier, you've got to earn the revenue and wait a month to get paid. So you're kind of 60 days before you get paid. And that's tough to catch up from.
Oh,
it
could take 2 years.
Yeah. And then the other one is getting the right truck. Like we see a lot of new owner operators that, Mark uses the phrase, they want to be Billy Big Rigs, all the chrome, all the fanciness, that doesn't make you any money. Like, let's get a good, economical truck that's going to be reliable, have the right payment amount, and make money off of, not look good off of necessarily. And then, and I guess the third one was just not changing carriers. But the fourth one, so we designed the program around that. But the one we're really learning when we look at the people that don't succeed, and even the ones that could do better, is they need the coaching to convert from a driver to a business, and all the things involved like that. That's a huge savings for an owner operator. If you're making $45,000 tax free, basically,
it's an immense thing.
And how do you run your business properly? And get the most out of it, because now you have a huge advantage over being a driver on your earnings.
One thing I have noticed, and I've really been careful to focus on, is individuals who go from, say, picking up a $2,500 to $3,000 paycheck every 2 weeks to suddenly doubling that.
Right.
Okay, having that rush of cash.
That's not your money.
It's like dopamine or cocaine or something like that. People lose their minds. And there's only a few rules that people should follow that really help you keep it from the ditches. The number one thing, and it's a big tendency, is, well, I want to keep my taxes down, so I'm going to buy this half-ton truck, put it into my corporation, and so meanwhile it's a $70,000-$80,000 half-ton going into there. Well, Canada Revenue Agency doesn't appreciate that. No. Okay, now there are some places where vehicles make sense in business, but auditors look at the independent operator industry and say, look, you already have a highway tractor. Why exactly do you need another vehicle? It's just to get parts and stuff. That's fine, but it's you have to defend that. Okay, so what we basically express to our clients is, you do not want to put a vehicle other than your highway tractor into the corporation. What you want to do is you want to charge your corporation cents per mile for the vehicle that you use. If you use your personal vehicle, you then charge your corporation a cents per mile, and that's very normal. We actually in our software, people go on the calendar or whatever, and they pick up personal PVL, or it's called personal vehicle log, and then they put the date, what they use their personal vehicle for, beginning and ending odometer, and they get whatever it is, it's 60 cents a kilometer, or depending on which jurisdiction you're in, and you can actually do much better using that system than anything else out there, because there's the primary reason is, if you put a vehicle into a corporation, it's cost based, which basically means that if it costs you, say, 35 cents a kilometer for the use of that vehicle, and whether that's depreciation and everything all included or whatever, you're only going to get a deduction out of your corporation of 35 cents. Okay? But let's say, for instance, now you have your personal vehicle and you're charging 60 cents a kilometer. Okay? And your cost personally is still only 35 cents. Right. So realistically, you're looking at 30 cents or 25 cents a kilometer that you are able to pull out of the corporation tax-free, and your corporation, it's 100% write-off again. And that's a non-taxable benefit. I'll give you an example. I have my Jetta out here, okay? I bought that about 8 years ago. I bought it for, I had about 36,000 kilometers on it when I bought it. Never bought a new vehicle before. There wasn't a new one. Then, but I bought it for, back then it was 19 grand or something like that. Right now, it has just under 400,000 Ks on it. Almost all of those kilometers are business. kilometers. So that's about 350,000 kilometers that I put in there. Now, I know what my costs are on that little Jetta.
Yeah.
It's like 10, 12 cents a kilometer for fuel, and then a maintenance and a few other things, and insurance and all sorts of stuff. My actual cost of operating that Jetta is about 22 to 25 cents a kilometer.
Yeah.
Well, that means 25 cents a kilometer. Let's say it's 50 cents. I'm collecting from half of all of that revenue is above my cost.
Yeah.
So at 350,000 kilometers, you're looking at about $175,000 that I got for my for the travel in that vehicle,
Wow.
and I only paid 20 grand for
Well,
it.
that car doesn't owe you anything.
It's paid for itself however many times over, you know.
Yeah.
And that's what operators, and actually all businesses, not all businesses, but most businesses should do. And that you're looking to pull money out tax free. Now you have to follow the rules for that, and it all has to be auditable. You have to work the system. It is actually quite technical to use non-taxable benefits. Actually, we've been at it now for almost 20 years. Well, actually, no. We started keeping record in 2006, but we started using it about 2002, 2003, so about 22, 23 years that we've been using it. And Canada Revenue Agency right at the beginning sort of said, oh, okay, but then we kept upping it, getting it more and more technical. Yeah. Now pretty much we have our own app, and everything is all done digitally. Yeah. And so when we defend it to Canada Revenue Agency, some of them still are kicking and screaming, but we've passed every single one of them. I know how to defend it to Canada Revenue Agency. It's knock on wood. It's just, we're all good with it. Yeah. But that makes an immense difference in an operator. Yeah. You know, and it's not just collecting non-taxable benefits, but it stops an individual from buying an $80,000 vehitle to try and justify it and say it's tax free, and in their mind, and you're actually lying to yourself. Yeah, you are. You know, it's and realistically, you want to get ahead. You have to keep your costs down, and too many non-business individuals, when they look at being an owner-operator, they say, well, I'm a big man on campus now. I need my half-ton truck on the side, and everybody respects me. No, you want to build your wealth in after-tax wealth, you know, and that's well, it's a tricky. I say there are some business people. When I first explain this to them, they just drool all over it. Just tell me what. But other people say, man, how come I can't? I want to put my new Sequoia in there, you know, and like, but it's
not worth it. Yeah, and that's really where I think, you know, the owner operator model. You know, I think it'll always be here, and it's a thriving part of the transportation industry. To be successful at it is really understanding how you can take advantage of a lot of those non-tax benefits,
non-taxable benefits,
because that's your real competitive advantage over being a driver. Because if you don't do them, you're making about the same money at the end of the day. If you don't take advantage. I
did a research actually for my first and second book, and Canada Revenue Agency doesn't actually separate a company driver from an owner operator, even in their own records. Maybe they do now, but historically, prior to 2015, they didn't. And and they said we don't do it because there is no difference. The net taxable income is the same thing. And realistically, the only way that the numbers actually make really good sense for an owner operator is once their truck is paid for, and they're able to save on the taxes. That's the big difference. Yeah,
and I think, you know, the other one they run into it too is if you know, they talk about they're making those big paychecks every month now. You know, they're gonna make 13, 15, 20 grand a month coming in after some of the deductions with the carrier. Well, it's not all their money. You got to put money away for repairs, taxes, and all this stuff, and they start living large and spending that, get themselves into a whole bunch of trouble, and then the economy normalizes a bit, and they're like, oh, you know.
And then you know what the problem is then? Then they say, well, my my truck started breaking down, and well, you can't make any money in the trucking industry because the maintenance eats it all up. No, that's not true. Or the taxes eat it all up, or whatever it is. And they justify it in other ways. No, not really. You started this 24 months ago, and you're now just reaping what you're sowing right now, or what you sowed back then. For sure. That's
that business coaching, I think, is one of the big keys to being successful.
Yeah,
and that it was one that we truthfully missed when starting Power Lease, and really want to catch up on. It's just how do you, Mark, again, being an owner operator, is very good about coaching on a lot of things. How to, it's a pennies per mile business.
Yeah. Oh,
right?
yeah.
How to get your tires cheaper, how to, do certain things to make the dollar stretch more. But the tax side of it and some of that side is really where we want to coach them and get the help. Yeah.
I actually really like coaching.
Yeah.
I like helping people out, provided that they listen.
I know.
That's the big thing. You know the ones that I've had the most difficulty with is the ones who make humongous money.
Yeah.
I have some clients in the oil industry and highly specialized stuff. That they are netting even after their non-taxable benefits, 140, 160, 180 grand or something like this. And I'm excited for them, and yet you talk to them, and they got their humongous house mortgage, their
boats,
truck, and their boat, and their cottage, and their jacuzzi payment, and they have no savings. They have no. I have guys who are making 40 grand a year, who after 10 years have their house almost paid for. Where these guys who are making hundreds of thousands, they're in the exact same state. And these 40 guys are guys making 40 grand. They're actually doing better than the other ones. It's not the volume that you make; it's how much you're able to actually keep
make it work,
and make it build for you. So for sure. Yeah. But that's one of the reasons why I like doing these podcasts. We're really helping out. Like I usually have my brother and my Peter Funk, my friend here, and we help talk about maintenance issues and consistency issues and stuff like that, and the like. But they're a little bit older, guys. We are all in the 60s or whatever, and realistically, the younger ones, they have to get into debt, because these guys, they typically back off and they say, I don't want to buy a new one, but because he doesn't want, I don't want to do what I'm doing at the speed that I'm doing, that I have to do it in 5 years from now, So their priorities. They actually change as you get older, and they should absolutely. And realistic, but younger guys, the 30, 35, 40-year-old guys, and say, wait a minute, I want to get into the trucking industry and build it. They, in their heart, they have to realize before they pop their head out of the clouds and get into the sunshine, it's going to be 10 years. To build good, solid equity so that your business is good. You need a strong cash reserve. If you have a used truck, you should have $30,000 to $40,000 cash. Just sitting on the side. Well, that you don't get that in 6 months.
No.
It takes years to build it up. Years.
Yeah, and you really, and I don't know if there's a tax benefit to that, but you really need to save. You figure out your operating costs when you factor in all the maintenance that the truck's going to need over its lifetime, and say, hey, what is that? Is that 12 cents a mile or 18 cents a mile? Whatever that cost is, and put that away. If I did 10,000 miles,
you can. That's one way of doing it,
or
and you could. Well, I don't know if it's necessary, but it could be. But the average truck driver in Canada takes home about $5,000 a month. As a driver, okay, that's after taxes, right? That's it. That's what they use to live off of. Okay, that's the national averages. Now, an owner-operator, if they stay on that same trajectory, that they like that same level as they were when they were a company driver, and then they should be no problem whatsoever. Everything else kind of takes it by itself, and because realistically, the other advantage is if you put yourself on $1,000 a month salary, and then you collect per diem on top of that in PVL,
Yeah.
it comes out to right around the $5,000 range,
Okay.
right in there.
So you're only paying tax on
Yeah,
1,000.
and you're only paying taxes on the 1,000, and so everything else stays in the corporation. In principle, it's not necessarily that you can't take it out in a case of emergency, but realistically, just put it back later on once the emergency over.
Yeah.
You know, your lifestyle should not change.
Yeah.
And if everything is into the corporation, then you keep your business and personal finances completely separate.
Yeah.
And that's really that's the key to everything.
Yeah.
There's so many. There was one guy who came in here and he was talking and he was going to be an owner operator, and I asked him shouldn't say a silly question, but I said, well, why do you want to be an owner operator?
Yeah.
You know, and he said, well, I have a whole bunch of credit card debt and this debt and that debt, and I just want to get out of debt. And I said, okay, you will have higher cash flow.
Yeah.
But unless you get your spending under control, you just put a zero behind all of your debt right now, and that's where you're going to be in 2 or 3 years' time from now.
Yeah.
It says you got to stop thinking it's not a get rich quick. It's not a get huge cash flow and get all your problems solved. Yeah. That's not. It's a business and a business structure that you need to stay in, and you don't increase your lifestyle anything in that until you are financially stable enough to do that.
Yeah.
Yeah, it is. It's, and that's what's so. You know, I call it there is actually a business terminology called financial business cycle or financial maturity cycle, but I use it in a different sense where people, if you go from $5,000 a month, having control of $5,000 a month, and suddenly you having control of $10,000, $12,000, $14,000 a month, you have to learn the discipline so that you don't get these shots of adrenaline because of cash. Yeah. Because you can have 10, 12, 15 grand in your account, and you have to be disciplined not to jump at something just because you can.
Well, I wish you taught me that in my 30s.
Yeah, a little. It is. It's no business. No different in business too. Yeah. I mean, if you're a CEO of a company and you're making, $10,000 a month, and suddenly everything is multiplied, and you now have 30 employees, and now you're making $100,000 a month. Do you lose your head because you got $100,000 a month depositing your out, or $1 million a month, and it's up here. You have to know it, and you have to be disciplined to separate what's actually yours from what's actually your business.
Yeah, exactly.
And some people just lose it.
No, it's tough. We've seen a lot. That's that poor money management has been one of the biggest mistakes, is not handling the money properly.
Yeah.
Especially back in the early 2000s, I was living in Saskatchewan at the time, and it was just busting open with oil and gas. It was again a lot of the spillover from Alberta for sure, but new things were happening there, and you get these new owner operators, and they get a nice fancy truck, but the first couple of paychecks were like 40 grand, right? It was just silly money, and so you get a guy when he first comes in to see you, driving an old pickup truck, hardly has two nickels to rub together, saved up to get his down payment. 3 months later, he's back with a big shiny new truck, pulling a brand new boat. Like, oh, geez.
Yeah, I know.
Guys,
it is.
Yeah,
it's sad. It's sad. It's because industries go up and down, like the oil and gas in Saskatchewan, up, down, down. All of these things, and
everyone does.
Yeah.
Transportation. We were talking earlier about it. It's a resilient group of people in it, but God, they go through some tough times, right?
Yeah.
And I would even like 2001 was bad, 2008 was bad, and we're kind of in that again, right? And it's a freight recession.
It's elongated. Probably the lowest freight costs were probably in 2008. 8, 9, right in that area. It dropped, but it didn't stay there very long.
No,
it popped up quite a bit within 6 months or 9 months or a year or whatever. Yeah. It was more realistic. But we have been
2 years
on survival mode for flatline for 2 years, and it was brutal. It still is brutal.
I worry about some of the mid-sized carriers. They were able to build up their balance sheets during those couple good years when things were flying, but to sustain this long of a freight recession, and it looked like we were getting out of it and things would be okay. But then if these tariffs come in, the tariff wars come in, they just, how much longer can they go?
Yeah,
is it worthwhile?
Yeah. I get calls regularly. What do I think about the tariffs? And I say, my opinion means nothing. It's only an opinion for about 7 or 8 hours.
Yeah, I know.
Because anything can change.
Yeah.
Like who knows what is. I do. There are some things that I see that are actually could be really beneficial for Canada if they learn it. Like for instance, they're now talking about opening up mining and stuff like this in Canada, much more so than ever before. We have to be more independent with our resources because we've been horribly irresponsible with it. We just don't do anything with it,
It's terrible.
And like all our oil and gas, we could. There's so much that we could do with what we could do. Even in this house, we don't nearly need everything to go to the United States.
No.
That's absolutely.
No.
But there's one thing that supposedly is supposed to happen. They're doing a lot of talking, and that is breaking the barriers between the provinces. And there's huge barriers there, and a lot of people don't know this. It's way easier to go north-south than it is east-west in Canada.
Thing, isn't it?
It is just ridiculous.
You can't do interprovincial trade.
Yeah. And if nothing else comes from these tariffs, then, okay, let's break down these barriers.
Yeah.
I think that's good for Canada long term,
Yeah.
It's but we have to get out of that crust that we've been in and just say this is the way we've always done it in the past, so therefore that's the way we always have to do it in the future.
Yeah, I think realistically we got lazy because
lazy is good
trading partner, and we kind of could rely on that, and we took our eye off the ball a little bit. We've got to be. I still would love the U.S. to be a great trading partner forever because they have been, but we've got to focus a lot more in our own country and sustaining a lot of that stuff, and taking advantage of our natural resources and maximizing what we can make on them.
Yeah.
We're rich in natural resources.
Unbelievably, we're almost.
Our economy should be so strong.
Other than, there's some like Kuwait and Saudi Arabia that are natural resources, but there's just one kind of natural, just oil or something like that. But we have the boreal forest, we have mining, we have oil, we have
uranium, potash,
everything. Potash. We're the second highest producer in the world, other than Russia, for it. I mean,
water.
Water. Manitoba is the cleanest water in the world. I mean, but we just don't care, or shouldn't say don't care. Somebody told me this many years ago, and I fully believe it. In the United States, the dream of a United States citizen is to be self-employed.
Yeah.
The dream of a Canadian a citizen is to work for the government.
Yeah, that's looked after by the government.
Looked after. And so we have to become way more entrepreneurial than what we are. We could unleash a huge amount of resources in our country, but we just got to break free from the government controlling things and saying what we can and cannot do and what we should do and stuff. The government's got to back off and become less of an issue in our country. Otherwise, it's going to just take us all down anyway.
No, I know. Yeah.
In the end, with our debt and how things, the natural expenses of our government, at some point in time, we won't be able to even afford the regular snow clearing and the highways and stuff like that anyway, because we're paying interest and all sorts of stuff like this. So we got to get our own finances in shape here. So, I
know. I'd like us to take advantage of oil and gas.
And
invest some the money in alternative energy as we grow, but not to mandate so quick. There's lots of opportunity.
So I got this is a little bit extended question here, but I just read an article a while back that the United States EPA is dropping the 2027 regulations for trucks, and with the impact they say is going to bring the truck prices down. Is that what you're hearing too, or
Well, there's so many moving parts these days. So, what I'd heard before, the new EPA was going to raise truck prices anywhere between, we're hearing $10,000, $15,000, $20,000 for a truck. Without that, it would maintain the prices of the trucks where they are. but then tariffs can change all that
Yeah,
too. But,
exactly.
But the EPA, there was going to be a price increase of that much with that coming on board. So without that.
Yeah, the changing of the EPA from something that is unattainable to something that is attainable, that is the biggest thing, because really they made rules that were completely unattainable. They actually knew that it was unattainable, but that just means as they were going along and there was non-compliance, they would just change the dates for something and bump off the dates, but everybody keeps squeezing, and it's a terrible. It's a terrible system that they developed. Now they're just opening it all up,
and for long haul, there's really not a good solution. Like some of the return to base trucking, where like a Coca-Cola delivery truck will go do their deliveries and then the truck comes back to the base. Those ones can be done with some different alternative energy.
Oh, absolutely,
But when you're long haul, like the weight of that battery takes up all the distribution.
You
roads
can
would crumble.
We do. I totally agree. I like the idea of even autonomous vehicles, electric autonomous vehicles in cities. That I see as a future. But long distance, no, not going to happen.
No.
I can't. It's unsustainable.
It is. The electric ones, especially. And the autonomous ones, you can see them kind of if they're going from California to Texas, nice roads, not snow covered like you get.
Yeah,
here.
exactly.
There'd be a lot of days that
I think
no one can see those lines. I don't know.
Canada is so unique because we can go from 40 degrees Celsius to 40 below Celsius in 1 year, and it puts such disastrous effects on our roads. Like it's just ridiculous. They're repaving stuff every 3 or 4 years. It's just nuts.
Potholes.
Unbelievable. For sure. But that's us. Also, the salt that we use just to keep our roads safe or whatever, it has corrosion effect on stuff that they don't have down in the States. I think all of the vehicles basically are built for the United States, not for Canada.
That's true.
But
I think just touching back on the new truck prices. So it'll be interesting to see where they land on that and with tariffs and everything. But just in general, like it's tough. Like there's already tariffs that are coming on the trucks because of the steel and aluminum tariffs. And I had lunch with one of the big carriers here in town who was talking that they got a call from the manufacturer they buy from saying that truck prices on the trucks they've ordered are going up $15,000 or more from tariffs. And
is it tariffs or a Canadian dollar? Because I just looked today and I just crap myself. Is 70 cents? That's what our exchange rate is. How much is tariff and how much is the exchange rate?
I think they locked in when they bought it at the exchange rate. So this was tariffs because the steel and aluminum tariffs are in effect already. Right? So just on that component, not even all the parts that were built and went back over the border too many times. But that and so they're it's now it's pushing it up significantly when you've got 100 trucks, saying, hey, what do we do? Do we cancel some of the order? Do we keep it? And it's hard. It's just truck prices are making it tougher and tougher to do business. The industry's not, the revenue, as you know, rates haven't gone up the way that fuel has or truck prices has. We've had interest rates rising over the last couple of years. They're coming back in check now, but that cost of business was getting to be quite high, and they haven't had the rate increase to kind of do with it. So one of the things we're looking at with owner operators are saying, hey, new trucks are not may not be the way to go. Do we look at some 2023s or 2024s and keeping some older fleets? Because they've come down in prices a little bit too. So
I keep thinking that if Canada doesn't watch about their own currency, we're gonna end up being like Mexico. It just keeps going down, peso, down, and then you go down to Mexico. They don't have new trucks there.
No,
I mean they have totally. It's like 1970s, 80s, 90 trucks.
Duct tape's the number one way to keep a truck together,
and zip ties, and that's all. That's all they do down there. And if we don't watch our own currency, if we don't watch what we're doing here, we're going to be toast.
Yeah, we really
burnt.
Yeah. We need the government to focus a lot more on economics and fiscal responsibility and get the economy going again more. It's time. Not to get political, but
no. It's hard not to.
Yeah.
I actually actually have been backing off from watching a lot of media because it affects my nerves. Nerves. I get annoyed. You know, and I realize that if I want to survive this long term, I can't get emotionally involved in this.
Right, yeah.
And realistically, this 24/7 news cycle, it is so harsh on us. Like we just got, you know what? Realistically, it comes down to we just have to make one choice a month. And there's no high pressure to make that choice this week or next week or whatever. But we just understand the basics. And so we don't have to fret over every little syllable that somebody says or whatever. So, what are we going to do here? Just make one choice and that's it.
Yeah.
You know, we don't have to keep track of absolutely everything because everybody has an opinion. Even we have an opinion.
Yeah.
But I find that North America is in a civil war. Mostly the United States is in a civil war with culture, and we're being dragged into it. And realistically, I don't want to ostracize family members who have a different opinion and stuff like this, because it's so easy to do that.
Yeah.
You know, somebody says something positive about Trump, and everybody jumps on him. Somebody negative about Trump, and jumps on them. You gotta have a nice, cool head, and in order to survive, because I when it comes to money, especially, and fiscal responsibility, I can get really emotional into it, you know.
I think someone was saying to me the other day that the news has become like, reality TV with Trump. It's just some changes every day. You don't know what's coming next. It's keeping you guessing.
It's exhausting.
And you could, what you learn in the news at noon is totally different by 6 o'clock, right? So it's, so many things can up and go. We're putting in tariffs. Oh, they're on hold again. They're on pause. Yeah, it makes it hard. The uncertainty. It makes it hard to do some planning, right? Like a lot of people are on hold up here in equipment purchases or contracts and things like that, just wondering what's coming.
Exactly. Yeah.
How do we change?
I agree. That is a huge factor. I know. I told people before there was any talk about tariffs at all. We were just people were asking this summer before the election, what should we do? I said, you know what? Just hold your breath and just wait until the election, and we'll see what happens.
Yeah.
You know? And so we were patient, and then the election was, okay, now we can do something. Then some things started moving, and it looked actually pretty good. And then all of a sudden they throw the tariff thing at us, and I go, oh crap, who knows how long this is going to last, you know? It could be all over the place. So, but I kind of think it's not sustainable past 6 months. No. And if it is longer than 6 months, Canada is going to have to just get entrepreneurial and find other places to ship their stuff to. You know, what I'm worried about is if we don't have this good, strong leadership in Canada that works with Trump and not for Trump, but with Trump, not against Trump, and so they were the good partner with it. Otherwise, we're going to lose the Canadian automobile industry in Ottawa. Or in Ontario. Because they can easily move all of that production into the States. And I think that's what Trump wants. I'm not sure if that's... I mean, he has the right to do it. If we had a prime minister who thought like him, maybe we would be much better off than what we are now. You know, to be concerned about our country rather than other organizations around the world or something like that.
In my opinion, again, it's just my opinion. I think it's hard to do change what we've done for 30 years of business in 30 days.
Yes.
So I visited some of the factories in southern Ontario for the auto parts manufacturing, and they're huge facilities with robotics and like they're state of the art. They're unbelievable. I just can't imagine they can build a new one in 30 days down in Ohio.
Well, if he would keep the tariffs on and he would focus on it, one by one they'll start moving. You know.
So I get him wanting to take those jobs back to the U.S. As the U.S. president, that that's what he should be focused on. But I think this is the wrong way to do it. Maybe incentive to move back down there over time. You can't do it in 30 days. Have a tariff and expect it to change.
Here's the what they're doing in the States is bringing down corporate taxes.
Yeah.
Okay, and that incentivizes everything down in the States. Our future in Canada, if we don't compete with that, if we don't bring our corporate tax rate down to be comparable to the United States, we're going to be we will not be competitive long term.
We have to incent people to invest in Canada and Canadian businesses.
Yeah. Exactly.
Yeah.
Exactly. Yeah. Right on.
Good.
Okay. Well. Perfect. Man, I tell you, I really enjoyed this. This was a good topic, good discussion.
And we'll have to get baback with Mark one time.
Yeah. We're going to zoom him in and talk about it. I'd like to bring him with the other guys too. Because those guys are all all drink the same Kool-Aid.
They'll be good old truckers that can talk about.
For sure. Right on. Well, okay. Well, thank you very much for joining us here on on the podcast today, and I hope you have a great trip.
Thanks for stopping by Making Your Miles Count. For further Making Your Miles Count productions, call us at 877-987-9787 or download us at makingyourmilescount.com.